All right, so today we're going to get into some crypto exchange sentiment. I'll be breaking down, of course, a lot around crypto.com. We'll do a full analysis of their damage control video that they did over the weekend, kind of give you guys, Kevin, a little bit of an update on that, but also at the same time give you a framework of what's happening in the exchange space. So we'll dive in deep. My name is Paul Barrow. Welcome back into TechPath. Man, this weekend has been hard on me because I feel like my voice is completely lost, but I want to thank our sponsors, and that is iTrust Capital. If you guys are looking at long-term holding, which I think this is one of the things that you start to do, and that is iTrust Capital. This is one of the places outside of self-custody that I would kind of look at for potentials, obviously because of the fact that it is an IRA. That in its own right gives you some tax benefits and also kind of sets you guys up for a long term. So take a look at iTrust Capital, make sure and use our link below. You'll get a $100 funding reward on that. Let's get into it today, and I want to talk a little bit about crypto.com. As you guys know, it's one of the ones that we follow in kind of our big exchange list, and I'm going to give you guys a rundown on sentiment. Let me do that first so you guys get a chance to kind of see this. So this is our current power index sentiment, and I want to show a couple of things, and what you see there in the middle is a white line there, and basically what that white line signifies is when we start to see sentiment, top line sentiment, this is what this is, start to fall under 40 or near 40, that's when I start to worry about any project or company or anything. That's top line crowd sentiment. So right now you have Binance leading the way at 5164, Bybit coming in at number 2, Coinbase coming in at number 3, KuCoin, then Gemini. So that essentially rounds out your top 5 right there. Kraken, of course, listed in there, Binance US right before the break, and then Pionex US also right before the break at 4567. Where it starts to get a little dicey is in around the MEXC Global section with there at 4028, and then you roll into crypto.com under 40 at 3986, Gate.io, Huobi, Bitstamp, Coincheck, Bitfinex, LBank, and then of course the trailing, meaning that there's sentiment at all on these, surprised me, is that FTX US and FTX, I think this is probably just some of the hopium that is people thinking they might get their money back on that. So that kind of shows, this is a November sentiment, that is the mid of November as we're recording this, as we've seen a pretty big fall off on exchanges. Now with that, there's also been a lot of movement within the exchange space itself, and I do want to show you guys a couple of things here. This, of course, is just a little bit from Nansen. This is the current net worth. They had 2.2 billion for crypto.com. And if you look at their historical, I'm going to jump over to a tweet right here. This was one of their historicals. Let me close that out just so you guys can see where this is coming from. So this tweet came in from Nansen. This was done, again, showing a little bit of historical analysis here at 2.9. And then you can kind of start to see the movement here, all right? And what's happening essentially is a lot of traffic on this particular exchange. What that simply means is many people would say, all right, well, Paul, that's a lot of people starting to self-custody or looking at starting to move assets. All of that could be true, and I anticipate that it probably is true. As you guys know, we talk about self-custody a lot on this channel, and it really is the only way to do it. If you don't have a hardware wallet, then you should start looking at some software solutions out there. There's a couple of those. Obviously, Binance has Trust Wallet, Coinbase has their own wallet, etc. There's a handful of others that you probably already use and know, but obviously hardware wallets are my favorite. So I always look at that, whether you like the Trezor. There's many of those as well, so make sure and check them out. But if you look at this chart right here, you'll just notice there on the far right, the spike that is exponentially much higher. And this goes all the way back into September 2020. And if you think about what has happened since September 2020, even if you look at January, Luna, all those kinds of scenarios, exchanges typically were not impacted dramatically. Now, what you saw in the end of last year, which was that last spike, that typically is people taking profits. So those are scenarios, that's the all-time high. And that is the case right here, is that we're starting to really see a pretty big impact on where crypto.com is being affected in terms of withdrawals. And we're going to go into his video and kind of do a full analysis of some of the things he said, and then also kind of fact check crypto.com in general, because you know, right now, this is the time that everything should be questioned in exchanges. Remember, in many cases, even though these US exchanges are regulated to a certain extent, so was FTX US, now in bankruptcy court. So don't just assume that these things have any kind of protection. You should always be looking at self-custody. Hey, using exchanges is fine. There's no problem with it. You get on, do your business, get off. It's that simple. Let's go over to one of the clips here. I want to play this first one and let you guys kind of listen in on this section right here. Here we go.
And most importantly, you could see that our platform is performing kind of business as usual. People are depositing, people are withdrawing, people are trading. There is pretty much normal activity, just at a heightened level. But it's not only important to look at how a certain...
So I just want to pause it there. I mean, heightened level. This is considered a heightened level. I mean, I look at this and just imagine the amount of transactions that have exploded onto crypto.com and the likelihood of people starting to just simply go into self-custody. So I don't necessarily agree with that statement. And I understand where he's coming from, but that in itself just not necessarily where I would kind of go from. Also, they go in and they talk a little about regulated and certifications. And I want you to just listen to this clip right here.
This is extremely important for everybody to understand that we've acted as a responsible, regulated player since our inception. We are a global alliance partner of Visa, a tier 1 financial institution. We operate the largest Visa crypto card program in the world today. It's a stable, regulated business. And everybody needs to look at the actions we're taking now to push for transparency and the actions we've taken in the last couple of years in terms of compliance and cybersecurity is our foundational layer.
All right, so let's kind of pick that up a little bit. And you guys can go right to crypto.com's YouTube site to listen to the whole thing. They go into it. Remember, this is their site. It's a Q&A with themselves. We open our show up to crypto.com as well. So if Chris, if you're willing to come on the show, we're willing to ask the questions. But I think the point that we're making here in terms of regulation, again, is really kind of, it's a half truth in the sense that, yes, so was FTX US, and all, you know, operators with exchanges in the United States have to be regulated. The problem is that the crypto market's not regulated in the sense that they are protected in any way. So that still represents a bigger challenge here. I think the scenario that's playing out right now and this may be a scenario that may not be a good thing for crypto in the short run. I think in the long run it will be, but it is going to put a lot of pressure on these exchanges that haven't been operating a little bit loose, and it will reveal them. It's just going to root out. That's the beauty of the blockchain. It roots out the bad actors, and eventually all of this will get exposed. And that's the exact same thing that happened with FTX. I mean, when you look at the straw that broke the camel's back was really CZ's move. Now I don't think he had really any knowledge of the impact this would have. He was simply trying to protect an asset that created domino effect into the industry. But I think this is going to be something that starts to occur now that the pressure is on these exchanges. I want to jump further into his interview because there's another piece here. Listen to this one right here.
The audit is to verify independently that every single coin that we have on the platform is matched by our reserves. And if you want to get a look of how this type of report look like, you can go to Kraken website. They've been doing this for many years. For our report, we will push extremely hard to do it within 30 days. If it can be done faster, we will do it faster. But you guys have to understand, these are audit firms. They don't operate on crypto speed. We need to onboard. We need to agree on the scope. And we need to complete this, right? And this is a large-scale platform, right? With fair amount of scale, right? So I assume that if we manage to.
So I want to pause there. For a large scale platform, a fair amount of scale, is that why we have not seen transparency before now. We're talking about one of the largest in the world. They've partnered with FIFA. They've done all these separate things, including marketing to the Staples Center. You name it. This company has been really, I mean, Matt Damon was the face of this thing. They've been out there. So I don't understand why these kinds of steps are being taken now as opposed to being taken in advance of what's happened here. And I think this is where it's playing out in probably a good position, unfortunately, for Binance. Probably Coinbase and Gemini seem to be staying out of the FUD right now. And maybe that's because they have made some very interesting strides in terms of regulatory guidelines and their own transparency. Obviously, Coinbase is a little different because they're a publicly traded company, so they're always being audited and looked upon. So I think this continues to put more questions into the exchange space than answers. I want to further into this video because there's an interesting piece right here that I think is worth it.
Another, FUD and stuff like that that's been going around, people are asking, is it true that you've stopped withdrawals?
This is absolutely not true. We're operating as usual. Again, there is a heightened level of activity, which means higher trading volumes, more revenue for us, also higher number of deposits and withdrawals, and we are operating as usual with higher levels of activity. What you will see is that customer service tickets, there's some backlog there, so we're working super hard on making sure that you get answers from customer service in a timely manner. But withdrawals are absolutely core, and withdrawals are working and will always be working. This is absolutely fundamental. So every time you see somebody on Twitter.
All right, so you heard him right there. I mean, they're working and they will always be working. So until they're not, and then that becomes a problem. Now, just to kind of clarify, and I'm going to give Chris the benefit of the doubt here, is that maybe what he means is there's not a withdrawal issue at the time that they were doing this AMA. But remember, this was back in January. Crypto.com was down. They left. They were unable to transfer and deal with withdrawals. They were suspended. And furthermore, back to his credit card statement about them being at scale, we have seen time and time again where Crypto.com keeps reducing the benefits to users, everything from yields to benefits on their cards to access to whitelisted wallets, withdrawal periods, all these kind of somewhat hoops that you have to jump through just to be able to do certain things. Now, granted, that's not just Crypto.com. That's being done on Binance. Binance has issues right now. I mean, if you are staking something on Binance, you've got a period that is a little bit unusual to be 5 days to unstake something and be able to use it and trade it. So it's not that it doesn't happen on these exchanges. What I'm getting at is that all of these exchanges are dealing with these same kind of scenarios. Now, they happen to be in a very, when I say they, Crypto.com, happen to be in a very precarious situation because they potentially have exposure to a lot more customers than what FTX had. So think about what's happening with FTX, and I'm assuming that they're going to be okay. I can only hope. But what I'm always looking at is just like anything, whether it's banking, any of those kind of scenarios that you're playing into, businesses, et cetera, you have to minimize risk. And in my opinion, this is just a good set of time for you to minimize risk by going to self-custody. Here's another video. I want to play this one as well.
There are only 3 coins where we stop withdrawals. One is Gala, which is a security institution a week ago, and 2 coins called SRM and Ray that are tied to FTX very closely. So we want to protect our users. And
all right, so what he said there was inaccurate. So right here, this was on November 10th. They suspended withdrawals on Solana blockchain. Obviously, as Solana was struggling because of the situation with FTX, and then also USDC. So and USDT. So that's not true of what he said there in terms of those were the only tokens that were suspended in terms of trading. That did happen. This is something that we will most likely continue to see there. And exchanges, I get it. We know this from history that, orders are paused, trading will get ceased on certain activities and assets that do cause high volatility. But the situation here, I think, is more about exit liquidity. And as we start to see exit liquidity, these are the things I'm most concerned around. And again, as I've talked, all your tokens at current, whether you're holding Bitcoin, ETH, whatever it is, you should be looking at a self-custody solution. Now, he'll talk about self-custody here in a minute. I want to get to another piece right here.
Moving on to the next question. Several influencers on Twitter have been saying crypto.com is in financial trouble. What do you have to say to them?
First of all, I want to just clarify, we are not saying that they're in financial trouble. What I'm saying is that in the volatility setup that we are in right now, from a market-wide contagion potential, you have to be able to minimize risk. That's all that I think now there's some guys out there, sure, that are very bombastic and, making these kinds of claims, but that's not what we're saying. I want to clarify this because there are some things that he says here that for the influencers that unfortunately kind of also prove that he wasn't right.
Well, this is not the first time that people are saying things about crypto.com. They've been saying it for a few years, right? And what I can say is that we will do what we've always done. We will prove people wrong with our actions and not our words. So in a couple of months, all these guys are going to look really, really bad for throwing allegations that have absolutely no substance. Right?
All right. First of all, I don't think anybody's going to look bad if they're erring to caution. And that's something that I think the industry is just going to do today, whether you like it or not, whether you're an exchange, whether you're a wallet, whether you're a ledger company, it doesn't matter. The scenario is that there's hundreds of millions of people in this business that are in the position of minimizing risk right now. And this is happening in Wall Street, happens in the real estate business. This is no different. The only difference is that we only have a handful of exchanges that have authority here in the United States to be able to trade on. So you are in a very limited group. And because of that, you get these congregations of large audiences, and it can cause a problem. It's like bank runs. If you only had a handful of banks to deal with in the United States, that would be a problem overall. So this is something that I think will continue to be the case. Now, yes, they've said a lot of things, but I just want to jump back over here to the Squawk Box piece right here. They were under scrutiny after mistakenly sending a large sum of ETH. So even though, yes, the influencers are out there saying probably stupid things and probably shouldn't be saying these kinds of things, but the reality is I think they look at it in the sense of, hey, we're just trying to protect our audience, those kind of things. For me, it's a standpoint of report the news, get the information out there. I make my own opinion on all of these, and these are the kind of things that we look at in terms of our research, is things like this right here. How do you send this level, $400 million in ETH accidentally? These kind of moves cannot be done just accidentally. They have to be. If this is done accidentally, then there is severe problems with the automation systems inside crypto.com for those kinds of fund levels to be able to move really at whim. These are the kind of things that always draw flags. It's why they're doing the AMA. So in itself, I think you have to just kind of bring those things to heart and understand whether you're there. What is it going to hurt you if you're pulling your funds off an exchange? What's the deal? Other than maybe you're losing a bit of yield if you've got something staked, something of that nature is about the extent of it. The exposure level, if you can take it from a risk level of just a 3 out of 10 down to a 1, wouldn't you do that? So this is just smart investing no matter where you are. If you've been in the real estate business, you're probably de-risking right now, trying to de-risk while you can before we start to continue to see a run up here on interest rates, which is going to slow the real estate market. Maybe you've already de-risked in the tech sector on securities. This is not something new, guys, to investing. This is normal stuff. And for him to look at it and say, well, people are out there talking about this, of course they're going to talk about it. This is the front-focused news story on everything from the Wall Street Journal all the way down to local news. They're talking about this every day right now, and they will be for a while. So for crypto to not get their act together is a pretty big deal. Now, further into his situation here is look at this story. This is a good example. Here's crypto.com. The understated layoffs. So how do you, if you're the CEO of something to the level of this size, this capacity, this liquidity, how do you not know when and what your workforce is and how much you're laying off? This dismissed at least 40% of its workforce. This is a report coming in from CoinGeek. And even if this is not true, again, I would like to see the data, but based on what I've read so far about this, they've got research that shows these kinds of numbers. And this is something that I think, again, goes back to where a publicly traded company, disclosures, those kind of things are required and are very important. That's why Coinbase may end up being the hero here in all of this, and possibly Gemini as they play into this. Again, you just don't know for sure because of all the volatility that the market is facing right now. But I think we're going to end up with a handful of exchanges that are able to make it through this and be in a position to kind of move forward in a way that I think normal people and even crypto OGs will be safe and ready to go back into exchanges. Because I think the FTX bombshell has been one that has woke everybody up in crypto. And also, I think to a certain extent, it has woke everybody up in DC and woke everybody up in Silicon Valley, because Silicon Valley got hurt on this. And I think there may be something to this, that Silicon Valley may be tied to this in a very negative way. Be on the lookout with what's going on with FTX. There's a lot more coming to light in the coming days and weeks that I think is going to surprise most of our viewers and listeners. So it's going to be very interesting. Let's go further into this because he has some more stuff to say that I think is important.
Moving to the next one. Why did you send nearly $1 billion in stablecoins to FTX? And were those $1 billion recovered?
First of all, people should always...
Let me say this. For him to ask himself that question, kudos to Chris, because those are the kind of questions that hard journalists would ask. And why would you do that? Why would you do that? So let's listen to his answer.
Look at funds movement on both sides, right? Over a year, $1 billion was moved to FTX, and we recovered all of this. We only had exposure of under $10 million when FTX shut down. And FTX was a trading venue where this is one of the few trading venues with decent liquidity for some of the coins, like the ones I mentioned earlier, SRM, Ray, and they were also one of the primary venues for Solana. So we do hedge some of our customers' orders there. And the way the brokerage part of our business works is that every time customer places an order on the app, buy or sell, we have multiple venues where we could hedge this order, and we pick the most cost-efficient one with best liquidity, lowest cost, so we can pass on these savings to our customers. And this means that we are not taking any market risk. We're always market neutral. But it also means that there must be fund flows between our venue and other venues in the industry.
All right, so he's talking about its fund flows there. And this is something that banks do all the time in fractional reserve banking. It's something that, it's the overnight rate that often banks will do to pick up to cover their assets or their requirements to meet federal guidelines. This is something I think on the transparency side that's going to be interesting to watch, because there will be a scenario where we start seeing proof of funds where maybe one guy says, hey, listen, I'm going to wire you $400 million today so you can meet your proof of funds requirement. You wire them back to me, and we do those kinds of moves. Those are the kind of things that I'm a little worried about in the space right now as it goes forward, because this could be a big problem in the future. But the fact that he answered that question, I thought was interesting. Let's go to this next one.
How does Crypto.com afford all these marketing spends with the amount of revenue?
I think that people need to understand how the communication side of things work whenever this type of deal is announced. Say our deal with our partners at UFC, there's a tagline number of around 175 million. But everybody needs to understand this is a 10-year deal. Crypto.com Arena, it's a 20-year deal. So we simply pay.
All right, so they have exposure up to 20 years on the arena. But at the same time, they aren't necessarily reporting profits. They report revenue. So the scenario is, how do those things play out in the fact? So you know that there has to be a solution here. Again, these are normal questions that a publicly traded company would have to fully disclose. Private held companies like Crypto.com, a little bit different here. So it's going to be interesting to see how this also plays out. But again, it's one of those scenarios that kind of just puts it up for grabs as to whether or not Crypto.com is going to be able to hang on should they see a bank run coming at them. So all this stuff is going to be very interesting to stay tuned here. Here's the last little bit right here, and that is, how are they able to offer a zero trading fee during this holiday season? To me, this is kind of a last gasp desperation of trying to maintain people on the network and on the platform. But in my opinion, these kinds of moves, these marketing moves right now, at the time in which we're dealing with, this is a troublesome time. These are not necessarily good indicators going forward. All right, so we're going to wrap it up for today. But again, remember, guys, if you're over on our podcast thing right now, side right now, make sure and jump over here to our YouTube channel. This is the place where you're going to catch everything, where we do live streams, all that good stuff. And of course, if you guys want to catch me, it's out there on Twitter @Paul Barron. Catch you next time right here on TechBack.